A lot of debt has built up in China in the last 8 years, so they too will suffer more than they did last time, and they will not be able to bail out the world as much as they did last time. We're all going to suffer. I can think of very few places that won't suffer. Maybe North Korea won't suffer, maybe Cuba, but most people are going to suffer the next time around.
The one man who helped build and oversee Newmont Mining's most profitable mine is on the cusp of delivering a new cash-flowing mining company to North America. With a 70 cent a share price target from Euro Pacific Capital, this 25 cent a share company is 35% owned by one of the most successful businessmen in America.
Learn more at crushthestreet.com/wealth.
Hello, everyone, and welcome into crushthestreet.com. I'm joined today with a very special guest. His name is Jim Rogers. He's a legendary investor, and he's been on our show before, and he's a favorite on our show. He's a really big name, an author, and I'm just honored to have him on the show, and I'm looking forward to talking to him about the severe situation that we're seeing in our markets, the volatility that we're seeing around the world. So Jim Rogers, thanks for joining me today.
I'm delighted to be here, Kenneth.
Jim, as I said, we're seeing some major volatility going into 2016. Are we seeing the central banks lose control of the grip they had on the stock markets right here, right now in 2016?
Yes, if not this month, soon. 2016 and 2017 will not be good, Kenneth, partly because of the mistakes the central banks have made in the past. They're going to do their best to hold things up. As you can see, they already are, the Bank of Japan and others. But unfortunately, I'm afraid that we're going to all have to pay the price. I'm not particularly happy about it, but they've made a lot of mistakes in the last 8 years, actually the last 18 or 20 years, but they've certainly made a lot of mistakes, which we pay for.
Was this just a reaction to the correction we saw in the early 2000s, the tech bubble, the dot-com bubble, and all of this, expansion of the money supply, lowering of interest rates? Is all of this coming to a head? Is that what you were talking about the last 18 years? What we're dealing with now is the system essentially overwhelming and collapsing based on the inflated bubble that they've been trying to inflate since the early 2000s?
Well, it actually goes back further than that. The root cause, of course, is the gigantic debt, which is built up in the developed world in the past few decades, several years. Then the American Central Bank, starting with Alan Greenspan, has done nothing but print money every time there's a problem. And, of course, all of this compounds and accumulates. And, of course, this is the first time, Kenneth, in recorded history that we've had all central banks, all major central banks, printing a lot of money, the Japanese, the Europeans, the Americans, the British. It's the first time where everybody is printing a lot of money. At the same time, everybody's building up a lot of debt. The world talks about austerity, but no country's going through austerity. Every country has higher debt now than last year, and they'll have higher debt next year. So it's a lot of things coming together. In the last 8 years, the central banks have printed money and held everything together, but whether it falls apart this year or next, it's going to fall apart. It has to.
Do you think the stock market volatility that we're seeing, especially going right into January, was a direct response to the 25 basis point rate hike that we saw the Federal Reserve do in December, or was it just coincidence and bound to happen?
Well, everybody in the world knew that interest rates were going higher. I mean, if there was anybody surprised, I don't know where they've been living for a while.
But did it shock the markets?
Anybody who was shocked by that should be shocked because it was broadcast over and over and over again. Maybe that was the wake-up call, or maybe that made people realize, oh my gosh, this really is going to happen. But it's coincidence more than anything else, if you ask me. The situation, Kenneth, is the rates had been going up anyway in the market, and then the Federal Reserve came along and followed the market as they often do. I guess this was a wake-up call. the American stock market was actually down last year.
It was.
If you go to the New York Stock Exchange, there were twice as many stocks down as up. I repeat, on the New York Stock Exchange in 2015, there were twice as many stocks down as up. So we've been having problems for a while. The averages have been supported by 8 or 10 stocks that never go down or that never did go down. But the real market was down last year. This has been going on a while.
Is that typical for the markets, the overall stock markets, to just be carried by a handful of companies?
Well, it's happened often in the last 2 or 3 decades, and it's actually the way markets work. You usually have, at the end of a bull market, a rising market, a narrowing of the stocks that are going up. They're usually the high-quality names or the hot stocks of the era, whatever it happens to be. But it always happens that at the end of a move, you have fewer and fewer stocks going up. And then, of course, everybody realizes, oh, my gosh, this is over. And then it collapses. Nothing new about it. It's the way markets have been working for decades, or maybe even hundreds of years.
Right. So if the Fed making their next decision coming up on their forward guidance to continue to raise rates, do you think they're actually going to be able to do that, especially in the face of all this stock market turmoil and global turmoil? Do you think they'll do that to the markets, continue to raise rates and attempt to get further and further away from zero?
You can see why we don't need central banks. They're causing more problems than good, especially cumulatively. I suspect they will not raise rates. If they do, it will not be more than one time, because the markets are going to be going down. And then when the markets go down, everybody calls the central banks and says, oh, my gosh, you must save civilization. The central banks, certainly in the U.S., are made up by bureaucrats and academics. They don't know anything. That's why they work for the government. And so they will panic, and then they will do whatever they can to save the markets. It's artificial. It won't work, just as it's been artificial for the last long time, certainly 8 years. No, it's not going to work. There comes a time when no matter how much money you have, the market has more money.
If you ask Obama or some of these other talking heads in the media, QE was successful, and I'll say that in quotation marks. You think they'll just revert back to more QE, since our experience with it, inflated the stock market, inflated real estate, and now they're pointing to a lower unemployment rate? Do you think QE is just more palatable for the markets and an easier thing for the central banks to resort to, rather than actually manipulating the interest rate?
Well, I don't know if they'll even call it QE in the future, Kenneth. I mean, they've done 3 or 4 QEs. It's a little embarrassing to come up with another QE. They'll probably call it, I don't know, cupcakes or spaghetti. Who knows what they'll call it to disguise it. They're going to try to do everything they can, printing more money or lowering interest rates or buying more assets. They're going to do whatever they can. But unfortunately, as I said, there comes a time that no matter how much PR, no matter how much whitewashing you use, the market knows that this is over, and we're not going to play this game anymore.
So, Jim, I want to get your thoughts on China. China was in the news at the beginning of the year, with their moves with the stock market. But I wanted to just get your thoughts. Is China going to suffer less than the U.S. during this economic collapse?
Yes, mainly because China has less debt. In fact, they have big assets. But, Kenneth, in 2008, when the world had problems, China had a lot of money saved up, and then they started spending that money. This time around, China itself has debt. A lot of debt has built up in China in the last 8 years, so they too will suffer more than they did last time, and they will not be able to bail out the world as much as they did last time. We're all going to suffer. I can think of very few places that won't suffer. Maybe North Korea won't suffer, maybe Cuba, but most people are going to suffer the next time around.
Did China, with all their building that they did, building out their infrastructure with their what people are calling ghost cities, Are they going to continue to build out this infrastructure, or will China just convert to a more consumer economy since so much of their construction has been done?
Well, infrastructure and goat cities are two different things. They have certainly, a lot of the money they spent in the last decade has been for infrastructure, which builds their competitive advantage. You know, building highways and railroads and airports, which is what a lot of what they've been doing, makes them more competitive in the future. The U.S. in 2008 started spending things on like bureaucrats. We made sure the bureaucrats didn't lose their jobs, etc. The Chinese have increased their competitive advantage with their spending, whereas we and other countries have increased our competitive disadvantage by what we spent our money on. We just raised debt, but did nothing for future competitiveness. Now, in the future, China's, I'm sure, will spend more money on infrastructure. Remember, China's infrastructure has been in serious decline for 300 or 400 years, and they've got 1.3 billion people. So there's a lot that they can do infrastructure-wise. There has been too much speculation in property and real estate in China, and you will probably see some people go bankrupt in the real estate business going forward. The government has said they're going to let people go bankrupt. I hope they mean it. So you're going to see problems in China, but you're going to see worse problems. I'd rather be in China than in Italy, Kenneth, in the next downturn. I'd rather be in China than a lot of places, but China will suffer.
Jim, is the U.S. dependent on China producing cheap goods still?
Well, everybody likes to get cheap goods. Had you rather buy a cheap car with good quality or an expensive car with the same quality? Of course, you want to buy a cheap car, a cheap television, a cheap everything with the same quality. So yes, China has an advantage, but other people are learning. You're starting to see Vietnam manufacturing competitively, and other countries. Myanmar will probably come into the market in the foreseeable future. I mean, even North Korea is starting to produce goods which are being sold into the market, the world market. But China's dominant, obviously, and as we have problems, China will certainly continue to be a manufacturing base, but they're going to have their own problems too.
You know, historically, China has supplied cheap goods for the U.S., and the U.S. has been dependent on that. As the U.S. declines, what do you suspect this transition will look like? I mean, is China dependent on the U.S. purchasing the cheap goods that they offer?
Well, Kenneth, we're all interconnected now. China's the second largest economy in the world. America's the largest economy. Europe as a whole is an even bigger economy than the U.S. Japan is the third largest single economy. But we all trade with each other now. It's not a question of who depends on who. We all depend on each other. And if you're a Chinese company that does business with Walmart, in the next few years, you're going to know something's wrong. Some Chinese companies will not suffer at all. I mean, China's horribly polluted, and they're spending a lot of money to clean up China. If you're in the pollution business, cleanup business in China, you won't know if Europe falls into the sea. You won't care because you're too busy. But if you deal with Walmart, you're going to know something's wrong in China. Likewise, if you're a mining company or a company which does business with China, you're going to, some parts of the Chinese economy, you're going to know something's wrong. I mean, Korea does a lot of trading with China. So does Japan. So do a lot of people. So we're all in it together now.
Jim, what are your current thoughts on precious metals? We're seeing at the moment, we're doing this interview, silver's in the $14 range, gold is above $1,100. Are we seeing a turnaround? Are you optimistic with what has been going on with precious metals over the last couple weeks?
Well, I own gold and silver and have forever. I have noticed that they've rallied. I'm not buying. I'm not a buyer. I suspect there'll be another opportunity to buy gold and silver sometimes in the foreseeable future. If that doesn't happen, don't worry. I own plenty of gold and silver.
Are you still thinking that with the stock markets collapsing, that could be bullish for the U.S. dollar in the short term?
Well, my largest currency position, Kenneth, is the U.S. dollar. And has been for some time, as I think you know. The U.S. dollar is a terribly flawed currency. The U.S. is the largest debtor nation in the history of the world now. So we got a lot of problems as the debt continues to go higher. But the reason it's my largest position is because, first of all, everybody else has problems. People aren't going to rush into the yen or the euro or something. People could perceive the U.S. dollar as a safe haven. It's not, but people think it is, which is why I own a lot of U.S. dollars. As the turmoil gets worse in the next couple of years, many people are going to rush into the U.S. dollar. The U.S. dollar is going to get overpriced. It might even turn into a bubble, depending on how bad the turmoil is. At which point, I hope I'm smart enough to sell my U.S. dollars, and who knows where I'll put it. Back to gold and precious metals, often when the dollar is strong, gold goes down or is weak. So if that scenario works the way it might, you'll see dollars going up, gold and everything else going down. I hope I will be smart enough at some point to sell my dollars, put them into gold or the Chinese renminbi or who knows where, whatever goes down the most and whatever's most attractive at that time.
Well, you're an intelligent investor, and you've been very successful with your calls. Jim, I just want to get your thoughts on oil. We're looking at $30 oil at the moment. Is oil starting to look like a solid investment, or is it coming to that point where it's becoming attractive at least?
Well, the word solid in the investment world worries me. Nothing is solid. Nothing is safe. Seen everything that's safe turn into a disaster in my career and read about it, and likewise solid. Yes, oil has been going down for a long time, and oil is probably in the process of making a bottom. But Kenneth, if we suddenly see a huge collapse somewhere, everything will spike down. That's how you make bottoms. Everything spikes down together. And so oil could have, who knows where the bottom could be. But oil is certainly in the process of making a complicated bottom as we speak.
And just to conclude, Jim, are you more bullish on silver at the moment or gold, considering their ratios and supply demand, all the different aspects that relate to them? Are you more bullish on one or the other?
Well, I own both. If I had to buy one today, I would buy silver rather than gold. I'm buying neither, Kenneth. I hasten to tell you I'm buying neither, but silver is certainly down more from its all-time highs than gold. So historically, silver looks better, but I'm not buying either at the moment.
And for the audience, if you were to give one piece of advice here in 2016, in conclusion, sir, what would that be?
Be knowledgeable, be worried, and be prepared, because it's going to be a mess. A lot of us aren't going to survive. I hope I do survive. I hope you do too, and I hope all your listeners do.
So I really appreciate you coming on the show today. Are you going to be speaking anywhere soon that you'd like to announce to our listeners?
Oh, I'm speaking. I'm speaking a lot of times. I cannot remember, Kenneth. It's on my website, which is www.jimrogers.com. But
we'll be sure to have that up for everyone. Jim Rogers, again, sir, it was an honor to have you on the show. I really do appreciate you coming on and sharing your knowledge with us. Thank you so much.
My pleasure, Kenneth. I hope we can do it again sometime.